Aparna Mehra writes in, the new category, focus funds, have the same mandate as of multi-cap funds, except the ceiling on number of stocks. They seem attractive, but will they be high on risk because of a concentrated portfolio?
Yes, the risk comes in two forms. One is that what is the likelihood of a fund manager losing money in a certain stock. So I think that if a fund manager goes wrong, the possibility of significant loss in a focused fund is far higher, because in a focused fund, a position in a stock can well be in the region of 5 to 10% generally, and so focused fund and the other is that focused funds can be far more volatile because you have fewer stocks. So on days nowadays we are seeing a volatile market. So the days on which the market goes down, you see the focused fund or concentrated funds falling much more than the market generally, or compared to other funds which are more diversified. I would say volatility is not as much of a risk on a 5 to 7 year basis, because volatility, the likelihood of losing money with if you stay invested, it's not a risk, but the possibility of losing money in a focused fund if the fund manager goes wrong is reasonably high. So yes, focused funds do come with higher risk of volatility, as well as the penalty or the penalization for a fund manager if he goes wrong with his selection could be very high. And if a fund manager goes wrong with a couple of them, then it could be a disaster.
So should one stay away from that?
No, but I guess that today that is where the fund manager evaluation for a focused fund actually comes in very handy. And also, focused fund may not necessarily be very focused, because what I find is that mutual funds many a times nowadays, because they are turning very big, funds are becoming popular, they are getting more money, and as a fund does better, a well-performing funds get far more money. So in that situation, the fund actually tends to be far more diversified than needed, and it is many a time forced to be diversified. So in that sense, I think many of the focused fund which say that it will be investing in 30 stocks, so it's been called
focused on
focused on 30, but I think 30 also gets you reasonable diversification, and it's not necessarily very concentrated. It might turn out to be, and so go by two things. Focused fund, you should look at the experience of the fund manager, of what he has set out to do, and what are the quality filters. That apart, make sure that a fund which is, even if it is focused, it's not less than at least 20-25 stocks, which is reasonable diversification for an investor. If you are comfortable with the volatility, some of the focused funds look very promising.